Things looked pretty tense overseas last week, but the stock market barely flinched. So, what's really going on here, and what should you actually pay attention to? Hi, I'm Josh Bretl, owner and CPA here at Wellment Financial. And our mission statement is to make retirement the best part of your life. But sometimes, with all the news and the headlines going on, it's hard to understand what you should pay attention to and what's really going to impact you. And we're going to break that down here. The headlines feel chaotic, but markets are staying calm. There's been a lot of back and forth with Iran, ceasefires, blockades, stalled talks. But despite all that noise, the market has mostly shrugged it off. Investors seem to believe this situation will stay contained, at least for now. Stocks are near record highs again. Just a couple months ago, there was a real concern about a downturn. And now the S&P 500 has actually pushed past 7,100, which shows how quickly sentiment can shift. Markets do tend to move ahead of the news and not react to it. As is the case quite a bit, oil prices are driving the ups and downs. And when tensions cool and ceasefires hold, oil prices drop and stocks usually rise. When things heat up again, oil prices jump and markets pull back. It's become a bit of a pattern lately, but it probably won't last forever. Company earnings are actually looking strong. About 84% of companies reporting so far have beaten their earnings expectations, and overall growth is around 15.1%. That's a big reason the markets have stayed resilient despite everything else that's going on. As for interest rates, they are expected to stay put for now. There is estimated to be about a 99.5% chance the Fed holds rates steady at the next meeting. That stability is helping keep markets grounded, even with global uncertainty still playing out there in the background. But we are keeping our eyes on big changes that are probably coming to the Fed. A new Fed chair is likely on the way, and that could shift how policy decisions are made. Markets will be watching this closely, but transitions like this are not unusual over time. At the end of the day, this is a great reminder that markets can handle uncertainty better than we expect. The key is sticking to a plan that is built for moments like this, not reacting to every headline that comes across your screen. And we sure have had a lot of those recently. This is another look back at what the heck just happened, and I look forward to talking to you next week.